What company would have given you a return of over 34 times your money and is not a tech stock? Stick around to find out. Hi everyone, Stock Ninja here. Welcome back to episode 2 of Who Beat the S&P 500. In this series, we discuss great companies that have a proven track record of beating the stock market over the last 20 years. Each episode will provide valuable information to jumpstart your research and help you determine if this company is worth your time. Founded in 1866, today's company is one of the oldest in the United States. This company is also a Dividend Aristocrat and has increased its dividend for 41 consecutive years, which is phenomenal. If you had invested $10,000 into this company exactly 20 years ago and reinvested the dividends every year, you will now have a balance of $344,656.74. Let that sink in. 344 grand. 34 times your money and nearly 11 times more than the overall S&P 500, which would have only returned a little over $30,000. On average, that comes out to an annual return of 19.36%. compared to the 5.75% of the S&P 500. Before I reveal the name of this company, go ahead and pause this video here and drop a comment below with your guess. Also, if you'd like to see more videos like this, please subscribe for future content. Thank you. Alright guys, what company doubles your money faster than paint can dry? It is none other than Sherwin-Williams. As a member of the S&P 500 index and situated in the basic materials sector, Sherwin-Williams trades with the ticker symbol SHW at a current market cap close to $53 billion. SHW stock currently has a dividend yield of 0.93%, which is not great, but at an excellent low payout ratio of 26.89%, showing room for future dividend growth. For the dividend lovers out there, they also boast a 10-year annual CAGR or compound annual growth rate of 12.28%. With the business centered around the full life cycle of paint and other paint-related products, their $17.9 billion in annual revenue is broken up into three main segments to maximize their business and profits. Consisting of over 4,700 company-operated specialty paint stores and operating mainly in the United States, Canada, and Latin America, the Americas segment generates 57% of overall revenue. The Consumer Branding Group and Performance Coatings Group make up the other half of their revenue, with the Consumer Branding Group having a more international presence, especially in Europe and Asia. This segment focuses on generating income through their 15 subsidiaries. Lastly, the Performance Coatings Group makes money from the sale of their coating and finishes products. This segment also generates income through the licensing of the Sherwin-Williams brand itself. Now, let's see how the company fared in the dot-com bubble crash, the Great Financial Recession, and how it's currently trading during the downturn in 2020. During the dot-com bubble crash, SHW shares fell 54.56% compared to the SPY's 50.41%, about the same. During the Great Financial Recession, SHW fell 43.28% compared to the SPY's 57.61%, with SHW performing better. Most interestingly though, during the current downtrend in 2020, SHW fell 45.65%. compared to the SPY's 35.62% decline, falling 10% deeper than the overall stock market, but surprisingly, its bounce back has been significantly higher. The stock is currently trading at only 3% off its all-time highs. Headquartered in Cleveland, Ohio, with around 61,111 full-time employees worldwide, Sherwin-Williams is led by Chairman and CEO John George Morris. According to Bloomberg, he started off as a regular employee in 1984 and quickly rose the ranks from VP of Sales to his current position. Most notably, Morris engineered the acquisition of then-rival Valspar in 2016. The deal was then finalized in 2017 to the tune of $9.3 billion. Since its acquisition, Valspar has proven to be a huge plus to the Sherwin-Williams brand. Morris took the head position on January 1, 2016. A quick look at SHW stocks since taking over the leadership role shows us a 145.5% gain since that time. For a company of this size, that is no small feat. The largest institutional shareholder is once again the Vanguard Group, with a 7.8% stake in the company. There are a total of 16 different institutions that have a 1% or greater stake in Sherwin-Williams, and a grand total of 1,396 total institutions holding SHW stock. This shows SHW is well loved among many financial institutions. In my opinion, given their phenomenal returns in the last 20 years and their successful business model, Sherwin-Williams is a fantastic company in the basic materials sector. If you are looking to diversify or add an additional company in that sector, Sherwin-Williams should be one of the first companies you start your research with. Thank you for watching, guys. If you found this information helpful, please drop a like below. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stock seen in this video. Thank you.